When silver was able to get above 35, 37, it was only a matter of time that it would be able to get to 50. Silver going from 50 to 100, doubling in the next 7 to 12 months. History tells us, look, this has happened before. Gold goes up first, and then at some point, silver really takes the lead. In the next 10, 15 years or so, we're likely moving to a new monetary system where gold will have to be reintroduced as money. There is no way we can get out of this debt bomb. We have to run the economy really hot. We have to print a lot of money, grow and inflate our way out of it. The system is not going to survive. Paper money always fails. The ratio is probably going to go to 15 to 1 or 20 to 1. Silver is not even close to where it's going over the next 5 to 10 years.
World War III is already happening.
This is a house of cards, and it is in the process of collapsing right now.
You're going to see an economic crash the likes of which we've never seen.
Hi folks, Canadian Prepper here. Today on the channel we have Jordan Roy Byrne, who is a chartered market technician and a master of financial technical analysis. He's the author of the 2025 book, Gold and Silver, The Greatest Bull Market Has Begun. He's also the editor and publisher of the Daily Gold website and the YouTube channel that corresponds. And he uploads quite frequently as well. Now, Jordan, the last time you were on, people were kind of cramping your style a little bit. And I think now it's time that we dance on the grave of our enemies. We do the victory lap. I don't have the champagne to pop or anything, but I guess ridicule is the price you pay for being early. When you were here last, which was, I believe, in March, silver was $33 an ounce. Since that time, I crunched some numbers this morning, and I'm not sure what it's looking like today. A little bit of pullback today. Still up 54% from that period of time. So, congratulations on being right. You called it. You said if it breaks through the 37 threshold, that it was going to keep on going up, and here we are. So, of course, everybody wants to know, what does Jordan think is going on and what's going to happen next? But welcome back.
Well, Nate, thank you so much for having me back. It's a pleasure to be with you and your audience again. And yeah, the technical setup in silver that we had earlier this year, it was really predictable. You have this major resistance around 50, and then looking at a number of different charts, the time frames, like for example, the weekly, the monthly, the quarterly. Like for example, the end of September, silver closed at its highest quarterly close ever. So that's really significant. That was an indication that on the daily and weekly timeframes, this is probably going to move above 50. And in addition to that, when you looked at the long-term chart, as we did earlier this year, as you noted, 50 was an obvious target, and there was limited resistance after 35, 37. So once silver was able to surpass 35, 37, there was a little bit of resistance. And when I'm talking about resistance, that just means supply. Like when people talk about resistance technically, that just means supply. When we say support, that means demand. So that's a better way to think of this technical jargon. But when silver was able to get above 35, 37, and then 41, 42, it was only a matter of time that it would be able to get to 50. And now it's flirting with 50. I know we're going to put up a chart that viewers will see as I'm chatting here. But historically, there were 3 other instances when silver broke out to a new all-time high, which it has done in the last week or so. And in all those cases, if we plot those and put those on the current setting, as we can see, in every case, silver went to about $100 in the next, I want to say 7 to 12 months. So even though that sounds extreme, silver going from 50 to 100, doubling in the next 7 to 12 months, history tells us, look, this has happened before, and it's quite possible. And also because silver is at a new all-time high. And so when a market, especially a metals market, commodities, oil, energy, all these things, when they break out to new all-time highs, it's also true with stocks. Like when they break out to new all-time highs, there's no overhead resistance technically. So that means there's no supply. Like when a market breaks out to a new all-time high, that means everybody who has bought the market and owned it, whether it's a metal or a stock, everybody owns a profit. And so when you own a profit of something that's moving up, people are more disposed, or predisposed, I should say, to continue to hold what they have. They're not going to sell. So that's what the chart tells us for silver now. it has broken out to a new all-time high. Now, maybe it comes back to 45 or, flirts around 50 for a little bit for a couple months. That's certainly possible. But zooming out here, when we're looking at 12 months from now, or even 8 or 9 months from now, there's a really good chance that silver could be close to 100 because, again, above $50, there is very, very limited supply. There's very, very limited resistance in selling that we're going to see above $50 an ounce. Now, again, day to day or week to week, we're going to see some volatility and, we could see some selling. But zooming out and looking at the very big picture, again, looking at 6 to 12 months from now, there's basically no sellers in this market. And so that, amongst other things, they are pointing to the fact that silver could double from here in the next 12 months. Again, this has happened in history 3 other times. Every time silver has broken out to a new all-time high. And that, I know I'm droning on here, Nate, but the last thing I want to mention, silver is at this point, it's nowhere near as close to being as overbought technically as it was when it peaked in 1980 or 2011. And also you had intermediate term peaks, which are that's a couple levels below like a major secular peak. But 2004, 2006, you had an intermediate term peak where silver peaked and, then it consolidated for about a year or so or 6 or 9 months before it began moving higher again. Silver is not even as overbought as it was in 2004 and 2006. So when you see these news articles, oh, silver is super overbought, or it looks like it's the same as 2011 or 19, it's no, yes, it is overbought now, but it's nowhere near at a historical extreme yet.
Yeah, so like what is the inflation adjusted price? Because when you look at 1980, I mean, that was a freak show. 2011 or whatever it was, that kind of made a little bit more sense. But what are we talking in terms of inflation adjusted? Because people are saying this is a parabolic run. But when you actually look at the chart over the last year, it's been like a fairly steady, I don't know, like a 45-degree staircase. It's not been this wild, run that you've seen back in the 1980 or whenever it was, where it was just like a boom event, right? So what is the actual inflation adjusted price of those highs?
The last time I looked at it, I want to say it was about $180 an ounce. So it's probably somewhere around $200 an ounce, somewhere in that area. And your point, Nate, you're exactly right, because that dovetails with what I am talking about technically. When I look at what's the distance above the moving averages, or how much has silver gone up in the last 20 days, 50 days, or 100 days, it's all telling that, yeah, this is nowhere as close to 1980 or 2011. And so when mainstream media or normie financial people mention those years and those numbers, like, they don't know what they're talking about.
So what is driving this? Like, I guess what drove previous cycles, and is what drove the cycles then, is it different from what's driving it today?
It's a really good question. There's probably other people out there who could speak to the fundamentals better than I can, but I will say we've seen this throughout history. What happens is gold goes up first, and then at some point silver really takes the lead. And so gold, I mentioned breaking out to new all-time highs. That's what happened in gold. Like, you go back March of 2024, gold broke out of a 13-year super bullish cup and handle pattern. It gets above 2,100. Well, where are we now? We're 19, 20 months from that point, and gold is at 4,300. Or yeah. I mean, it's almost double. And we're talking about gold. This is a major market. I mean, it's doubled in 18 months. So that's what happens when it breaks above that point. But I would say it's fear of inflation. What's interesting now is you go back to the 70s and 80s, or the late 60s and 70s. There was no China in the market. There was no India in the market. So, you have a major player that's in the market now. And so with respect to gold, and I mentioned gold because silver follows gold. Silver's like gold is a dog, silver is the tail, to use a bad analogy. And so what's going on with gold, one thing to keep in mind is if you look at the percentage of reserves that foreign nations have that are in gold versus treasuries, T-bills or T-notes, T-bonds, the percentage of their reserves that are in gold in the 1970s, I don't have the chart in front of me, but this was really high. Like in the 1970s, the late 1970s, Nate, the percentage of reserves that all these foreign nations, it was in gold, was super high. I want to say it was 40% or 50% or something around that level. You look at where we are here and now, yes, the percentage is increasing. The central banks of these countries, they're buying gold, and they have been for the last couple of years aggressively. But even with that, the percentage of their reserves that are in gold, it's still tiny. It's like 10 or 11% compared to, again, in the late 70s, this was like 40%. And so these countries can see that, we are, in the next 10, 15 years or so, we're likely moving to a new monetary system where gold will have to be reintroduced as money, as legal tender in some form, because we know that the system the system is not going to survive. Fiat money, paper money always fails. And so that cannot be disputed. That will happen. Again, I'm saying, could be 10 or 15 years. Maybe it's 7 years. Maybe it's 26 years. I don't know. But that is a virtual certainty that the monetary system will fail and that we'll have to have gold come back into it. Now, you're asking about silver. I mentioned all those points. And in addition to that, with gold, if you look at the budget situation, the fiscal situation of countries in Europe, but also the U.S., there is no way we can get out of this debt bomb. Basically, we have to run the economy really hot. We have to print a lot of money, grow and inflate our way out of it. That's how we did after World War II. And that's the only solution. And I think if you look at the percentage of our federal income that is going to our debt now, it's like 20%. I mean, can you imagine paying just 20% of your income on interest? I mean, that's how messed up the fiscal situation is in the U.S. So, and because, again, the only way out of that is you have to grow and inflate your way out of it, like we did in the 1940s. So that's why they're cutting interest rates. They're not cutting spending. The spending's going higher. So you think about that, and then you think about all the foreign nations that don't have enough gold. They see what's happening in the next 10 or 15 years. They're saying, shit, we have these T-bills and T-bonds, that are, losing money, right? Like, we got to get out of this and we got to get into gold. So, and that's the other point for, professional investor. We're talking about, aside from countries, if you look at more professional investors or well-to-do investors who they made money in bonds for it was great. Oh, I'll sell stocks. I can, put $1 million here in the bond market. I'll make 3 or 4%, no problem. The bond market is in a secular downtrend. This is only the second time this has happened. From 1920 to 2021 or so, the only time you lost money in bonds was basically 1965 to 1982 or thereabouts. That has happened again in the last couple of years. Bonds are now back in a long-term down. Again, this only happened once for 100 years, Nate. So people, most people, they're not aware of this history, and it's really shocking for them to be in a world where you're losing money on bonds. And so everybody that owns bonds in the last few years, they're losing money. And what happens when you're losing money in bonds? Well, you basically put that money into blue chip stocks or you go into gold. So that's what's happening. And these trends are going to continue. And so I mentioned all these things with respect to gold because, again, silver is the tail that wags the dog with respect to gold. So gold, all these things are really positive for gold. Gold's going to keep moving higher. And that's good for silver because historically, when gold does really well, then silver does even better. And that's where we are for silver. Now, silver is mostly a monetary metal, even though it has a huge supply demand industrial side. It is driven more so by gold and the monetary side. But one more thing, the industrial side of silver, what we're starting to see, which has never happened before in the last year or two, is typically with silver, you either have rising investment demand or rising industrial demand. So historically, when the price is rising, that's typically all investment demand. And then you have lower industrial demand. Now, if the silver price is going sideways or it's falling, not performing well, you don't have investment demand, but you have rising industrial demand. However, in the last year or two, what's happened, it's one of the first years, I think, ever where you're not only seeing rising investment demand, but you are seeing rising industrial demand. So the industrial supply situation for silver, I'm not saying there could be a shortage in the next year or two, but 5, 7, 10 years from now, there could be a shortage of silver because the industrial
isn't there already
demand
a shortage?
There could be in some cases. I mean, there are lots of stockpiles out there. And again, I'll say this is the silver, this is not my exact expertise, speaking on the shortages in silver. Someone else can better answer that. But I will say, in some cases, we are seeing a shortage, and that is pushing the price up. I think London, for example, there is a shortage of silver in London, and so they're trying to get it from the U.S. And so lease rates have been spiking, and that's contributed a little bit to the rise in silver. But there's so many other factors that are driving it.
Well, you're saying the industrial demand. So do you know exactly what that's being used for? Is it AI? Is it solar? Is it tech? Like, what is driving the increased industrial demand? Or is it just a consequence of larger populations of countries developing and needing infrastructure and things of that nature?
I think it's all those things you mentioned, but solar is obviously a massive part of it. The AI, the data centers build out. You need silver for a little bit of that. So those applications, amongst others, they are driving the industrial demand side, which again, this is really important in the last year or two. Investment demand has been red hot in silver, or it's been rising in silver, but industrial demand has risen at the same time. Usually it doesn't happen that way. It's usually one or the other. So this tells you about how strong industrial demand is now. It's rising in silver, even as the price has been rising significantly. That rarely happens.
I think some of that is geopolitically related as well. There's a lot of risk factors with war and whatnot. But I mean, holy shit, you said a whole lot of stuff there. So there's so many unprecedented things that are kind of coalescing at this point that are, creating a very unique, fertile environment for this thing to really rocket much higher by the sounds of things. And you talked about how China really wasn't even in the game back then. And I just watched a video of, I think it was Vietnam, who's rolling out some kind of digital ID thing or something, but there's people lining up to buy gold at record prices. Like, they literally did the meme. And so something is percolating here. But, that point in itself, where you talked about how in China back in 1980, they weren't in the game. So I don't know if you wanted to elaborate a little bit more on that, how that Eastern demand is a new driving factor here that perhaps wasn't even there in the past, and how that's going to play into all this.
Yeah, I can elaborate a little bit on that. Again, that's not my exact expertise, but China and India as well, they have an affinity for gold and silver. And these, in foreign nations, less so than us in North America, they understand that governments print money and currencies lose value over time. So I would say normies, because I talk about normies in North America who are not big into gold and silver, but the normies in China and India and other places, again, they're big into gold and silver because they understand. I'm not going to,
they understand money fundamentally.
Yes, they do. In us in North America, much less so. And so they know that, it used to be they would sometimes hold their money in US dollars, when there wasn't the kind of problems that we have today. It was US dollars or gold and silver for them. But now it's all gold and silver. And so they accumulate, they buy every month, which is what we should do in North America. Just buy a little bit every month, just grow your stack. If the price is up a lot like it is today, you're buying a little bit less. If it goes down, you're buying a little bit more. This is what they do. This is what the normies in China and India do. So they're consistently buying, and that's in addition to their governments. Which, I mean, we know that China, they're on their way to being the most powerful nation in the world. And I don't know who had the quote, but he who has the gold makes the rules. And that's why they've been buying shit tons of gold consistently over the years, because eventually, at some point, they're going to have more gold than we do in the U.S. and they're going to they want to become the world reserve currency. And who knows, maybe that happens in 30 or 20 years, 40 years, I don't know, 10, 12 years. But that's the side of China and India to a lesser degree. But yeah, they just have a cultural affinity for it. The government's buying it, and the people they understand what's happening. I mean, they know that currencies lose value over time, and that's the way they protect themselves.
So there's like this American Western psychology that just really doesn't grasp what you're saying, because all we've ever known is, fiat, and all we've ever known is good times. And, these other countries who maybe have generations that still remember what hard times look like, and still remember that pieces of paper are just that. They're not like, they're promissory notes, but they're not, guaranteed. You can't guarantee that you're going to get something for that in the future in the way that we've just become accustomed to. So, it's very hard, I think, for Westerners to wrap their heads around, especially when you can go and buy Bitcoin and crypto and everybody's seeing the stock market go up. Is there like a strategy that the average Joe, can utilize in order to enter into like the silver market? As preppers, obviously, we prioritize food, water, shelter, medicine, ammunition, those types of things. But if there's like disposable income to hedge against inflation, what sort of strategy does a person take at this point in time when we're clearly at record territory for all the metals? So how does a person enter in and play this game? Like, does a person load up now, or do they wait for a pullback, or do they just dollar cost average? Like, what is your recommendation there?
I think when it comes to physical metals, I like to think of them as a form of financial insurance. So I would say it's best to buy a little bit every month. Even if you only have $50, you can buy an ounce of silver every month. If you have greater disposable income, you buy more every month. I think that's the best way and the safest way to do it, because yes, the prices are going to go much higher over time. But as you know, I think you noted at the beginning, we're kind of stretched here with gold. Gold's pretty stretched. So we're at risk where the market could cool off for 3, 6, 8 months, 2 months, somewhere in there. And so that's what people need to understand. They can't get frazzled or upset because they go all in tomorrow and then suddenly gold's down $300. You need to think about why you're buying in the first place. And so again, right. Physical gold and silver, just buy a little bit every month with however much or however little money you have. And in a couple of years, 5 years, you're going to have a nice sized stack of gold and silver. So again, buy a little bit every month. Don't try and time the market, because that's your goal. It's financial insurance, and your goal is 5, 7, 10 years from now, you want to have a lot. And so it's a month by month thing. That's how you build up to that point. Now, if you're speculating or buying the stocks, that's a completely different animal. But you need to understand the very big picture where we are. Again, short term, medium term here, metals could definitely cool off for 3 or 6 months. But if we're talking 2 years from now, 3, 5, 7 years, they're going to be much, much higher. And so the best way to prepare for that, again, don't go all in tomorrow, or try and time the market and wait for some huge pullback to buy in. Just buy a little bit every month. Next month, buy a little bit. Month after that, buy a little bit.
Yeah, I mean, there's such a confluence of factors. I mean, you got the banks now talking about 20% allocation. There's banks failing. There's hedge funds buying this stuff. Countries, nation states, individuals. I'm sure there's a lot of people buying it in secret. I'm sure the Middle East is loading up and stockpiling the stuff in bunkers. And I think what you made an excellent point, because people get into this to speculate, but the reality is it's supposed to be a hedge against inflation. It's supposed to be a means of retaining value over time. And so if you go into it with that mindset that, look, this is just an insurance policy, as opposed to, I'm trying to make money and get rich, because you do that in other, if you're looking for the next 10x, gold, silver might not be the thing, even though there's a lot of people, in your line of work who believe that will be the case. But, don't wait for that. That would be my advice, is just, have modest expectations and just know that it's a safe haven asset. In that respect, you're retaining value. I mean, I don't own a lot of silver and gold, but when I buy it, it's just to have an emergency, insurance policy in case things get really bad. and then in that case, maybe the value rises, and then you don't lose a lot. What do you make of the new allocation recommendations by these banks? Why all of a sudden are they predicting like $5,000 gold in 2026? Why are the banks making these weird calls all of a sudden?
Well, first of all, because metals prices are going up. So that's what happens. They start going up, and then the banks will say, "Oh, they could go up a little bit more." And then when they start going up way more, then they have to turn bullish. Um, but I do think the one thing about the banks is they're not. Yes, when we see these headlines, there's an element of dishonesty in them, but we don't want to be. We can't assume that like they're going to be wrong the entire time, or we can't assume that they have ill intentions with these headlines that they put out. Sometimes they do. I'm just saying we can't base. We can't have one opinion. Oh, the banks are always wrong. They're trying to throw people out of their silver and gold. And look, that can happen at certain points. I think it's a function of, honestly, you talked about the 20%, because what we were talking about before, bonds, they're in a secular bear market now. The long-term downtrend in bonds is in place. So you can't put your money in government bonds at 3 or 4% and expect to earn a inflation-adjusted return over time. So these banks, and they're seeing that as well, and they have clients who own millions and millions of dollars of these bonds that are losing value. And I mean, it's one thing to own a stock and it loses a little value. I mean, it can always come, but bonds are slow moving. The bonds are supposed to give you really low risk income year over year, year over year. And so when they're losing money, that's a really bad thing. And that money has got to go somewhere. And what are the three major asset classes: stocks, bonds, and gold? Besides gold, gold, you have other commodities, silver as well, copper. But those are the three major asset classes. So stocks and bonds, gold. When you're losing money in bonds, you're going to put some of that, you're going to sell and then put some of that money in blue chip stocks, but also gold. So again, bonds are dead for only the second time in the last 105 years.
Does that mean the system? Does that mean the system is collapsing and imploding?
It could. I mean, again, that's probably that's a great question, and it's above my pay grade and expertise. And I will just say, if you look at the last downtrend we had in bonds, the last time you were losing money, again, 1965 to 1982, we had the system. Or we at the federal finances at that time, the U.S. government was strong enough, and the economy was strong enough because there wasn't a lot of debt.
Right.
It was strong enough where we could raise interest rates to 20%. You think interest rates could go to 20% now?
Yeah,
hell,
that'd be
we
insane.
we'd bankrupt ourselves back to the Stone Age. I mean, you could not raise interest rates that high. There's way too much debt. There's way too much consumer debt. Way too much government debt. So I think, I would say, to answer your question, I'd say, yeah, more likely than not, I think you're right, because given the whole debt situation and given the fact that we see bonds are losing value and people are taking that money out and they're putting it in stocks, putting it in gold, putting it in silver. Again, given the debt situation and the debt bomb that we are in right now, that we were not in the late 1970s, I would say, yes, you're probably right. And again, the only way to save the system, which I think will happen, and the system will change, is gold will have to be reintroduced as money into the monetary system at some point. And if you look at 100-year or 200-year charts of gold and silver, you can see what's going to happen. You can look at gold and what's happening. Again, you look at a 200 or a 150-year chart of gold. This thing is going straight up in terms of, again, this is a historical viewpoint, a 150-year chart. What does that tell you? When gold is going to go straight to the moon? Yes, the monetary system is failing. And again, gold will have to be reintroduced as money at some point. And again, that getting back to gold and silver and what people should do, just buy a little bit every month. Buy a little bit every month and get educated.
What do you make of the whole gold silver ratio? I seen a little picture the other day that showed, throughout the ages, the various gold to silver ratios, and they always range between, 10 to 15. Is that just, is it useful, to kind of focus on that? Or is it now irrelevant in light of, changes in industry and things like that? What's your take on the gold to silver ratio as a predictor of things? I mean, does that mean gold's going to go down to meet silver? Is there going to be a convergence at some point?
Well, the short answer is they both will continue to rise. Silver will rise more in percentage terms, but gold and silver can also be used as a great indicator, because if you look at the historical peaks in gold and silver over the last 100 plus years, what happens to the gold silver ratio? It always gets down to that number you were talking about, 15 to 1. And so the fact that it's, at 80 now, what does that tell you? With, it's come down from 110 or so to like 80. What does that tell you with where we're going? When this thing ends, that number will get to 15 or 20.
So you think
what does that tell you?
You think that there's nothing different now that should warrant it to take a different course, that ratio will be reestablished at some point?
Yes, I think it will. Again, the end, the secular bull market that we're in for gold and silver, which, is it going to, maybe it'll last another 12 years or 8 years or 10 years or 15 years, but we will know that it's ending when the gold silver ratio is down there at 15 or really damn close, because that's what's happened every other time in history. And so the fact that we're at 80 right now, what does that tell you? We have a long way to go. We're like at the end of the beginning now.
Just some like kind of open-ended, non-technical questions for you, and then we'll wrap this up, because I know my editor wants to get this video out done today, and he's only got about 5 hours to work on it, which is not much time in communist cameraman time. So, because he's got to take a lot of breaks. Do you at all ever imagine, and I don't know how much physical you hold, but you think there is, a realistic scenario where silver can actually become real transactional money again, or is that just a fantasy?
I would say it's not a fantasy, but my opinion is it's probably unlikely, just because of how much we need for industrial purposes.
Yeah, so you can't really foresee a system unless there's like some kind of major calamity that ensues that we would be, take us off digital for whatever reason, if temporary. Maybe it's prolonged. Maybe it's temporary. Maybe it's prolonged.
I would say, just to add a couple more thoughts. Silver is money. Don't get me wrong, but we did have a silver standard at one point, hundreds of years ago. But again, given the need of silver for industrial applications, the ones that you mentioned earlier, I mean, there's so many. I just don't see it becoming or coming back to the monetary system. I think again, gold being reintroduced into the monetary system, I think that's far more likely, and silver will, it'll trade as a commodity. But again, the ratio is probably going to go to 15 to 1 or 20 to 1. So, I don't want to throw out like huge numbers, but if you think about the historical peaks that gold has had, you look at during the Great Depression, you look at 1980, the US gold multiplied by the gold price at those peaks, it backed over 100% of the US monetary base. What would the price today have to be to back 100% of the monetary base? Like $22,000 an ounce. And I just mentioned the gold silver ratio. When there are these historic peaks in the market, it gets down to 15. So you put those numbers together, it's going to go to 4 digits at some point. I'm not saying it's going to happen tomorrow or even 7 years or 10 years, but the peak at the end of this market, that just shows you where we are here and now. Like it's not even, silver is not even close to where it's going over the next 5 to 10 years.
Yeah, it seems like a no-brainer, and there's not a lot of attention being paid to it, which makes it intriguing for somebody who's long. In terms of storage of your metals, like, is it something that you allow others to custody, or do you do it yourself, or do you bury it in the backyard? Like, what would your approach to be? Because, preppers are a little paranoid about government confiscation and maybe theft and things of that nature, like as anybody should be. But what sort of strategy do people like yourself employ to custody the metal?
Well, I would say employ diversification. Don't have it if you're, if you're keeping it at home, don't have it all in one spot. If you're keeping it with somebody else who's in someone else's custody, have a couple people or businesses that are reliable that can do that for you. So I employ diversification in that case. But that's a great question. And I'm not, and when I say, oh, it's not my expertise, I'm not trying to score points for being humble. I'm just mentioning there's other people that can better answer that question for me. Hence, I don't want to give out an opinion that isn't necessarily from an expert standpoint.
I was going to ask you a question about the paper markets. Is there, have they lost the war? Because, the shorts, are they getting chased out? Because it seems like, for a while there was really a lot of pressure on silver from the ETFs and futures traders and stuff like that. Is that going to be less of a factor moving forward?
Not necessarily. I would say, presuming that silver will rest here for a little while, again, maybe 6 months, 3 months, whatever. After that, the next time you see silver go above 50 and it starts, 70, 80, starts moving towards 100, what you're talking about there, that will come back into the forefront. When we see the price move more aggressively like that, there are going to be people who want more physical metal. And that's when you're going to see, failure to deliver and those sorts of things. So for me, watch the price, because when you see the price accelerating, and again, there's probably some of this in recent weeks as the price, you can see where the spot price, which is the immediate price, is actually high. It's still higher than the futures price. So, again, this was, I think because of what was going on in London. But for me,
what was going on there, just for people for us laymen who don't know what's going on?
Well, London was trying to get silver, and the lease rates spiked. So normally, if they want to get silver, we can lease it to them, and they pay 3 or 4% or what a small fee. But because supply, at least in the market, had been drying up, the lease rates in the market spiked to, I believe, 34%. Now, my buddy Vince Lancy, there's an interview on my channel, and this is exactly what he was talking about. So if anybody wants to delve into that a lot further, Vince explains it perfectly. But again, that was, or I'm, because I'm saying that is or that was, because it's ongoing, but I think it's kind of slowed down. That was a situation where London was trying to get physical, and there was, the only way they could get it was paying the super high lease rates, and so the price spiked a little bit. And so these types of things, I think you're going to see a lot more of them in the next leg higher in silver. Again, when it moves from 60 or 70 to 100, expect these types of things to be in the news and to transpire at that point.
Good stuff. All right. So if you guys want to learn more about silver, metals, and the market and whatnot, go and check out Jordan's channel. It's called The Daily Gold, I believe.
Yes.
Yeah, and you interview a lot of great guests as well. I'm going to ask you one last question, and just give me like one short answer. And we're not going to hold you to it, but we're going to try to have you back maybe early 2026. Usually we interview people every 3 or 4 months. So what do you figure, if you were a betting man, what do you figure the price of silver and gold would be around those periods of time, come January 2026?
Ooh, I mean, that time frame was really tough. If you gave me a couple more months, I would say higher, but I would say around the same level. That would be my guess. If you gave me more time, I would say, if you gave me 6 or 9 months, I'd say much higher, but only 3 months, I'd say around the same level.
So still at record highs.
Yes.
There you go. All right, man. Well, thanks a lot for coming out. I appreciate it. Guys, go check out the Daily Gold. Link is in the description below. Thanks a lot, Jordan.
Hey, thanks so much for having me, Nate.
The best way to support this channel is to support yourself by gearing up at CanadianPreparedness.com, where you'll find high-quality survival gear at the best prices, no junk, and no gimmicks. Use discount code PREPPINGGEAR for 10% off. Don't forget, the strong survive, but the prepared thrive. Stay safe.